Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 4th, 2021. I am Frank Ochoa, aka PivotBoss. Before we get to the charts, I do want to say thank you very much for joining me for our PivotBoss Masters open house yesterday. If you missed it or if you want to re-watch it, the recording can be found at pivotbossmasters.com/profits. If you scroll down the page right here, you'll see there's a link right here to click and watch the open house recording. Again, next week we will be hosting live sessions for any Masters members. The live Masters schedule is right here. You can gain access to PivotBoss Masters via any of the links here. And again, we have a special offer going on right now that gives you a ton of great incentives to be a part of Masters right now. So again, please follow the pivotbossmasters.com/profits link in order to watch the Masters open house recording. All right, let's take a look here at the ES in the daily time frame. You'll notice right here that the ES has dropped in overnight trading and hit precisely the 37.77 FOMC key level. That's the FOMC key level from January 27th. It hit it right to the tick and has bounced off that level. Right now, if you look at the intraday time frames, whether it's a 4-minute or 5-minute chart, 15-minute, 60-minute chart, you have a bit of an inverted head and shoulder pattern that's developed down here, and price is attempting to bounce from these lows. We really need to see price get back above 38.20 in order for a continuation to the upside to be seen. But this market has been heavy, especially behind the weakness of the NQ. If there's any failure to hold this FOMC key level at 37.77.5, it will open up the next zone below, and that will be 36.50. That's that next major support zone below and the previous month's low. So right now you'll notice that in with regards to the PivotBoss weekly pivots, right now we are at the previous week's low and previous week's close. Again, if price can find acceptance back above 38.20, there could be a move back toward 38.60 in the near term, but overall we're seeing a pattern of lower highs and lower lows right now, a rounded top behavior, and any failure to hold 3800 today, and especially that 37.77, could open up a continuation toward 36.50 down below. Now the tendency here on a pullback like this is for a continuation higher to be seen, right? So you get that pullback into this zone. If there's a rejection that can be seen here, perhaps we get some sort of movement like this where it finally finds some strength and continues to new highs. But again, this market has been heavier than what we've seen recently, and we got to continue to watch these key levels. So any failure to get above 38.20 today could open up additional weakness today. Any failure through 37.77.5 could lead to significant selling pressure the rest of the session. If we take a look at the NQ, again, the NQ has been among the weakest here of the futures contracts ever since this strong top here. We've seen lower lows, lower highs, followed by lower lows, another lower high, and lower lows, and now price is trading right at the previous week's low and the previous month's low. There is a bit of a box that is formed below those lows, and on an intraday basis, if price can get above 12,700, it could open up a short-term rotation higher. Any failure to find acceptance above 12,700 could open up weakness ahead. Right now, price trading right at the FOMC key level from December 16th. Again, a failure to hold 12,500 and especially the 12,465, which is the top of the key range here, could open up more weakness back to this lower key level down here. 11,560, 11,570 could be the next downside target if this zone here is not held. So right now, on an intraday basis, bulls need above 12,700. Failure to do so could open up another round of selling pressure. And again, if this market closes below 465 by the end of the day, that could open up quite a bit of weakness back toward 11,570. Let's take a look now at crude oil. Now, crude oil, we mentioned in the previous session, had a great rounded bottom pattern that was developing in the 15 and 60-minute time frames. We needed price to get above 61.50, and it did. It was able to get through that zone. Today, you're seeing price actually close the previous session above the 8-period average, and today forming higher highs, higher lows. That rounded bottom coming in full effect. The 62 level, significant today. It has broken nicely through 62s, currently holding 62.37s. Any pullback right now into 62s could offer a buying opportunity for a continuation higher today. Failure to hold 62s could be significant. Again, this market has been among the strongest since the November lows, and any pullback into the PIMA trigger zone and into that higher value relationship with the pivot range suggests more upside into 65 to 66 up ahead. But a failure to stay above 62.50 could start to suggest maybe a lower high developing here. So we need to start seeing price continue through that zone. Any pullback to 62s could be important on an intraday basis. Lastly, taking a look here at gold futures. Gold, again, showing weakness here ahead. In the previous session, closing with lower lows here. You can see today the midpoint of the previous session's range also being defended early on in today's session. 1720 to 1722 has been an area of resistance today. Above that zone could open up 1740. But right now, again, we are in a very clear downtrending market. You can see the bearish PIMA trigger zone is dropping significantly to add resistance. So even if we were to bounce into that zone, it could provide another round of weakness. Based on the fact that we have broken and violated that major 1760 support level, suggests that we are likely headed downward towards 1660, which isn't too far away from yesterday's lows of 1699. So looking for more weakness up ahead unless price can push through 1722 on an intraday basis today. That could provide a little bit of short-term relief to the upside, but again, based off the lower value relationship, based off the dropping PIMA trigger zone, any bounce could still be met with selling pressure for a continuation towards 1660. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.